Hey, good afternoon, everybody. Going to go over our Forex trades for today, February 1st. We did have two trades, pulled out 18.2 pips on a size adjusted basis. These were left over from last week, which we were trading at the end of the week, trading half our normal size. So we had 20% of one and 10% of the other. It was a correlation trade. We'll go over them in a minute. First, just want to talk about some economic news that came out today, and also actually uh, last Thursday night, because Friday we didn't have any trades that we closed out. Thursday night, Japan announced that they will be going negative interest rates. So here's a country that has been at zero bound rates longer than we have here in the States. They've been there probably about 12 years or so. They can't create inflation. So they really shocked the world. No one expected it Thursday night. And you can see here, that's the big spike, because as you can see, this is US dollar, Japanese yen. We correlated this with pound yen. So we had this big spike here from the surprise announcement. The yen sold off against both US dollar and Japanese yen. And the British pound. Japan is trying to stimulate the economy, as most other countries are. It's just another sign that the Fed made a bad policy error last month, and there's been more calls over the weekend since then, during Friday, for the Fed to reverse course, to either cut rates or even cut rates and start another round of quantitative easing. So it'll be interesting to see what happens. It's just again, it's just another sign, not only that they made a mistake, but that world economies are extremely weak. We can talk about it forever and debate it forever, and we've been wanting the Fed to normalize rates for over 2 years now, but they didn't do it, and they're insisting that they raised rates last in December, and that they still want to raise rates this year because our economy is strong. And there's no proof the economy is strong. So this morning, some more numbers came out, absolutely horrible. Personal income actually ticked up a tenth, beat estimates by a tenth of a percent, but personal spending missed estimates by a tenth of a percent. Personal spending actually came in flat, where estimates were for a growth of 0.1%. 42% of December personal income came from government social benefits, mostly Social Security and Medicare. So that's not a good sign, right? The government, the politicians, the Fed, they can't figure out how to create jobs, how to revive our economy and get the economy really, growing quickly and juking and jiving. And here it is, 42% of personal income for the month of December came from government social benefits, and mostly Social Security and Medicare. So that is really a scary sign. Spending on goods, both durable and non-durable, tumbled by $34.6 billion in the month of December. Just a terrible sign. Then we had ISM manufacturing. That came out 48.2. That index came out at 48.2 versus 48.4 estimate. Another miss. We know manufacturing is in a recession already. Manufacturing sector has already entered recession. Not a good sign. This is a really bad one coming up. December construction spending came in at 0.1%. The estimate was a growth of 0.1%. The estimate was for a growth of 0.6%. So a really bad miss on construction spending. So that's a terrible sign. And then the Atlanta Fed came out with their GDP forecast for the first quarter of 2016, and they expect the first quarter to grow at an annualized pace of 1.2%. And that's 50% below Wall Street consensus estimates. So, and Atlanta Fed is a really accurate indicator. Granted, it does get updated every couple of weeks, so it could change between now and when the GDP numbers for first quarter are announced. I mean, we're just only in the first quarter, but it's not a good sign. So let's get to the two trades. It was a correlation trade between US dollar yen to the pound yen. We were long dollar yen, we were short pound yen. They're highly correlated to the tune of about 90 to 98%. And not only that, pound yen is twice as volatile as US dollar Japanese yen. So almost exactly twice as volatile. So just because they're correlated doesn't mean they're going to move in the same amount of pips. So therefore, you need to take a smaller position in pound yen than you do in US dollar Japanese yen. So we had in US dollar Japanese yen, we had 20% of our normal size. Therefore, in pound yen, we had 10% of our normal size. And when that correlation, it was relatively wide when we put it on. And when the correlation narrowed, we were able to book our profit. Initially, let me just move over here, pound yen. You can see how, so we were short pound yen and we were long dollar yen. And you can see how pound yen was really, after we shorted, it just went up against us. And dollar yen really didn't do a whole lot. I mean, it did tick up, but then pretty much went sideways. So we were down the position, but again, accounting for the size of each position, we were not down, we were never down more than maybe 15 or 18 pips. So we weren't down, we're going to risk 30, 40 pips, in a correlation trade with no problem. We never even approached that. And then the news broke and they both popped. Here's the US dollar Japanese yen and the pound yen. So the news popped and they both moved very big. And then we actually ended up liquidating the position on US dollar Japanese yen. We were long it from, this is a mistake here. This is supposed to be 181.126. Let me see if I can fix that real quick. 181.126. Yes, we were long from 181.126. We sold 121.340, picking up 321.4 pips, or adjusted for size 64.2. And then on pound yen, since we were short this from 167.991, we covered 172.589. You're going to put them on at the same time and you cover them at the same time. And you sell or you cover your short at the same time. So we covered 172.589 for a loss of 459.8 pips, or size adjusted 46. Again, we had 10%. We had half the amount that we had of this US dollar Japanese yen. So on the pound yen, we lost 46. On US dollar Japanese yen, we made 64.2. So net, we picked up 18.2 pips and booked it and moved on. So no other scalp trades, swing trades, anything like that. And then this morning we had a bunch of economic news, and we also had Mario Draghi speaking at 11 o'clock from the ECB. Let me see if I grabbed what he was talking about. Yeah, I don't see it. He was it was at 11 a.m. this morning on the East Coast. He just reiterated what he had said when they announced their interest rate decision last month. Just trying to see if there's anything else I could pick up on that we maybe missed as far as economic news and stuff like that. Goldman Sachs talked a little bit about oil. He said despite the sharp bounce in oil prices, we do not expect that production cut will occur. There was a rumor going around last week that either OPEC or some other countries were going to cut production of oil, which would obviously raise the price of oil. Goldman Sachs doesn't expect it, but who knows what'll happen there. Anyway, so that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. Hopefully we get some more action tonight and tomorrow morning, and if so, we'll do a video tomorrow. Have a great rest of your day.